All the time in the Great Report, we are talking about multifamily commercial real estate. Today, we're going to be talking a little bit more about the single family rental market. It's actually doing really well, above average rent growth. And John Burns Research and Consulting, as well as CoreLogic, have some great new data we want to dig into on the Great Report. Also, from Moody's Analytics, elevated completions continue to weigh on multifamily rent growth, with multifamily operators seeing shrinking margins. But again, will supply slow down? Will we see some more return to normalcy? We're going to discuss that and a lot more on the Great Report. If you're a multifamily investor, active, passive, somewhere in the middle, and you're in the right spot, every single week we're going to break down all the latest research data on multifamily real estate, commercial real estate, the macro economy. So strap in. Let's get ready. Welcome back to the Gray Report. Joined again by Director of Communications, Marketing, and producer of the Gray Report, Dr. Matt Bosnagel.
Hi, good to be here.
Matt, a great report this morning because again, we talk about multifamily all the time, and we're still going to be talking about multifamily because that's what we do here at Great Capital on the Gray Report. Practitioners, operators, property managers, capital raisers, etc. But single family homes, single family rentals, it's made up a larger portion, especially since of the rental stock since the Great Financial Crisis, 2008. And most of the listeners know that multifamily rents have, last year were mostly negative, and, we're just struggling to stay positive in 2024. Single family rentals are telling a different story. What does this John Burns Research and Consulting piece, they're very proud of the data, break it down for us. What's going on in the single family rental market?
Yeah, I think that it's showing a lot more stability. I think the highs weren't quite as high as the multifamily rents got to, but the lows aren't nearly as low. And I bet if you evened it all out, they're doing maybe a little bit better, of all things considered, post-pandemic, these past 4 years, than apartments. I think that is, it could be due to millennials reaching like a different life stage. And that's why I kind of paired this John Burns Research and Consulting, this recent article on single family rental trends with an earlier article that they wrote about birth rates. And they paired it with the idea of, move up housing, or like you're moving in from a smaller like starter home to a larger house. And that's what they link this birth rate. But I think I'm kind of continuing a conversation. You mentioned it a couple weeks ago when we covered that first one, was what about single family rentals? Because if we're talking about life stages, and one of the big life stages is either having kids or getting old enough where maybe you don't want to share a wall with anyone, whether it's a detached home or not. Even if it's a townhome, you want a little bit more privacy maybe, and you want more space. You maybe have a little bit more money. And,
the American dream.
Yeah, the American dream. Well, you can rent the American dream as much as buy it, maybe. And I like if is it to own a home or is it to live in a home?
Yeah, well, and I don't think that that's really a choice anymore for a lot of folks who were at that stage in life, who were saying, I'm going to make that transition. I want to live in a house. Again, whether they just want a little more privacy, they want a garden, they've got dog, or they have kids, which is the traditional factor. But that's not an option for a lot of folks because of how expensive mortgages are, interest rates. And
that's like making this link between life stages and housing. It is worth acknowledging. Yeah, for millions of people, they just can't even make that. That decision, whether it's for because of affordability, which is huge, or they just maybe they live somewhere where they can do it.
Well, and there's flexibility also. I think there's a preference to say, I don't want to lock myself in. I might maybe want to move. Maybe I want to, switch careers. Maybe, we're living in a larger city and we're going to move somewhere else. But we don't want to lock ourselves in right now. But again, then also there's just the cost between interest rates, but also it's not like we've seen single family home prices come down. They've continued to increase. So it's becoming more just further of a reach for so many folks that are kind of at that stage in life. So it's not surprising to see that the rents in single family rentals are elevated and are actually at above average rent growth levels,
Yeah.
where we're not seeing that in the multifamily industry.
And that's really, taken together, I would expect. It seems like there are a lot of people. The demand is here. The demand is here for single family homes in general, whether it's buying or renting. And if you can't buy it, and this interest rates is a huge kicker. Yeah, sure, it's home prices, but home costs are huge. And we'll see in this NAR report that that affordability has, it kind of almost improved, but then it's gone back down because, regardless of how sluggish home price growth is, the mortgage costs have been so high that it's just preventing people from getting ahead, from being able to make that first home purchase. Period. But that being said, with this in mind, I do think that in your 20s, you're most likely to be an apartment renter. However, you're seeing this influx of millennials maybe that want to move out to suburbs, maybe rent a house. I don't think that in this article specifically, now it showed the 3.6 rent growth, and it showed the stability throughout the pandemic. But I don't know. I'm curious about build to rent as a discrete segment from single family rentals. I've heard more shakier things about maybe build to rent properties being pieced out and turned into less of a single plot of land and more of piecemeal single family
The
homeowners.
lines are definitely blurred. I think
Yeah.
in the BTR space, I mean, you get kind of some townhomes or again scattered site. And BTR build to rent is definitely all the rage. It makes sense. I think home builders are exploring it. Saying, hey, if we can just unload 20 of these, 30, 40 of these properties, houses at one time to one buyer for a similar price, rather than selling them to end users. Now, the reality is, though, an operator of BTR is going to want to get a little bit better price than someone who's buying it, to actually live in, theoretically. But at the same time, there's such a demand for that type of product that you can achieve some really high rent levels, relative to multifamily, because you're getting the amenities of it being your own space, which is hard to discount.
I'm just wondering what the mechanism is for maybe a owner of build to rent, that they're not, if things aren't going well, is there a way to let one go? Now you don't have 20 in one site, you got 19, and that one's just going to be sold to an individual. Or if there's some kind of HOA thing where if you're managing all these, then that person has got to contribute.
Well, and thinking about selling the BTR development, if you own 50 single family rentals in a little neighborhood, you sell off one or two, how are you going to sell those eventually? How are you going to sell the whole development? Are you going to sell it as a BTR with, with the exception of one or two? But at the same time, it could, basically doing almost a condo conversion or apartment to condos, where you're basically taking rentals and then selling them to the end user. Again, theoretically, you could get a higher price, and if there's a ton of demand for single family homes. So, for example, if interest rates come down, and you bought that single family home for, let's call it $250,000 per unit, and then interest rates come down, you could sell it to another BTR operator for maybe $300,000 per house or whatever. Maybe that's pretty little cheaper than it'll actually go for. But then you might be able to sell it to an end user for $350 maybe.
You got to wait for 50 people to come line up.
Exactly. So again, you're getting a premium, but do you want to do 49 or 50 transactions, or do you want to do one transaction? And then the financing on all that's difficult too, because are you financing the entire site? Are you 50 different loans? Can you carve out all the different parcels? Has it been parceled out? And there's not one answer to any of that. So it's going to be interesting to see how this segment develops over the next decade or so. It's not going to get all figured out today, this year. But it is fascinating, and there's clearly a demand when we're looking at millennials, where they are in their stages of life, and then just kind of American culture, wanting to live in a house rather than in an apartment often, but not always the case. And again, it's not always an option for everybody, because you can't necessarily afford that amenity, which is your own four walls.
I totally agree. So whether it's life stages or what, this report says that single-family rentals have been, like I said before, well above the 3.6% historical average before the pandemic. I believe it's 3.9% now. I could be wrong here. But it does look like it's 3.9% now. And this is a time in which apartment rental prices have been zero, sometimes negative. Prices for single family rentals, again, above average post-pandemic, and their average rent seems to be a little bit higher than the average rent historically for apartments. Rent growth for single-family homes didn't get to the upper to mid-teens like it did for apartments. As you can see in this graph here, it peaked at 7.6 according to John Burns. Now, I looked at CoreLogic numbers, and CoreLogic suggests maybe single-family rent growth did grow that much. It has current rents at 3.2%, a little bit lower than the John Burns numbers, but their peak rent growth was 14% in early 2022, according to their chart. Really has a big spike.
Any
in rents.
insight into the different methodology at all? Or did they disclose any of that, of where they're getting this? How they're parsing the data?
Not exactly. I think that there may be. They do have a. They break it down with lower and higher prices a little. It's definitely a little more volatility in the CoreLogic numbers. I'm using that as an example of, well, sometimes these numbers aren't all the same.
Well, it's not always perfect, because again, you're not going to be able to get pricing information and rental information from every single family rental, and so then you're also asking, is it same store data? Are they going back to the same rentals, different rentals? And so again, if they're not going to go into all the details of the methodology, maybe they do somewhere. Maybe we can have somebody on from CoreLogic. And
I can take a look. I didn't really dig into like their sample size and what kind of markets they covered. I'm kind of assuming that they're all decently big. I think that they're all trustworthy, but they're just getting different slices of the market. It's kind of in the same way as Apartment List. It showed a higher peak relative to a few other sources, but its lows are a little lower. Now, when it comes to single family with these CoreLogic numbers, it does seem like, well, wow, the crest was almost double the crest of the John Burns numbers, but the dip didn't really dip that much lower. So we're talking about 14% again in the peak in early 2022. And I think that some of this is due to a demand for single family rentals, but also I think compared to single family construction, multifamily starts grew more quickly from the period between mid 2021 to mid 2023, and really only in the past year have single family starts grown more quickly. And you can see the intersection, but so for a long while, since again mid 2021, there was a peak of multifamily construction, and that has been generally going down. Multifamily construction has been going down. These are starts, but single family starts took a little bit different. It dipped down significantly, and really kind of reached a low point in the early 2023, and now it's dipping back kind of towards normal. But the net building,
but it's definitely increased. I mean, definitely a divergence of single family and multifamily.
Yeah, it has diverged in the middle. In the middle of 2023, it intersected with multifamily going down, and now single family is going up. But the length of time it takes to build homes is such that the single family homes, we're not going to see that inventory, or we'll just start to see that inventory, which kind of helps to explain why home prices are, they're still steadily rising.
Yeah.
I was checking home price numbers too, and I was surprised that actually their home prices did dip a little. They're still higher than they ever were before, but it's not like they uniformly increase. There's a little bit of wobble in home prices, but it's still but they're still higher than they ever been. There was not a significant impact of the pandemic or anything like that with single family home prices compared to apartment rentals.
There's so many calls for housing crash throughout the pandemic. Again, it's like every couple months, we're right around the corner from absolute crash in housing, especially single family rentals. Remember it was the kind of the deferred mortgage payments, and there was a foreclosure, the boom that everyone was waiting for that never materialized ever, for a variety of reasons.
Yeah.
But
that's what I'm glad I put it in my notes. So the most they ever sunk was from June 2022 to January 2023, home prices went down about 5%.
And that's when everything was going.
Yeah. And since then they've gone back up. Now they're about 1% above that June 2022 peak. So, and if you see the chart, it's like there's like a seasonal wave kind of that they go up and they go down, they go up and they down. This is volatile. The chart we're looking at now is volatile because I have it adjusted to the rate of annual increase. But again, I still think that the larger trend that you see with declining multifamily and increasing single family over time shows that intersection. But you can also see how much more multifamily construction there was during that time where we're seeing it now. So we're really cresting the wave of multifamily construction. It's going to be a little bit more to see that single family construction.
Sure, a little bit, maybe not meaningful, but a little bit of pickup in multifamily starts. Although, we'll see how that really kind of materializes, as we go forward. And, developers I know are feeling the hurt and the pain right now.
Mm-hmm.
Want to go over to talk about, where do you want to go to next, Matt?
If we can look at this NAR report on residential real estate. Now, I'm going to be referenced. So they have a website or the webpage that will summarize this snapshot. But then I would also encourage viewers to look into the report itself, which has a little bit more of additional information that I'm going to be referencing here. So
sorry, I'm grimacing just because the
formatting.
I think that they screenshot.
Yeah. Actually, if you go into it looks a lot less pixelated if you go into the report. So that's a second teaser there. From new home sales, according to census data, are down by about 40% from the peak in the fall of 2022. The pending home sales number from NAR shows a drop that's even more sharp, dropping nearly half, 46%, from fall 2020 to now. That's the big part of the snapshot. That's the dramatic drop that you see. There may be little blips, and it gets a little jumpy, but we are.
No one wants to sell their home.
Yeah, no one wants to sell their home, and it's not like we've dropped from a peak that was an artificial peak and we're back to normal. We're dropped way below the normal right now. We're comparing these pending home sales. They have their pre-pandemic number as like 108. Now just anchor that, and now we're at 70.8. That's ridiculous. That's a lot less home selling and home buying going on, and that's not good. I know it doesn't mean that people are out of they're out of homes necessarily, although it could be argued that the home inventory is low, and that means that people that want homes can't get them.
The only people that are going to sell their house right now is because they have to sell their house. They're moving, or they're just, it's been in the works and they put it off, and they say, we're just going to bite the bullet, buy the home. Even if it's at a high price, even if interest rates are high, maybe I can refinance in a couple of years. But I mean, again, if you have to move, you have to make that call. But obviously, if we're not back to a kind of a normal housing cycle or housing market of normal volume, and that most likely will not recover until interest rates decline. I wanted to say normalize. I don't really know what the normal interest rate will be, or where that starts to kind of unlock housing supply. It'd be interesting to kind of do some
and what this says to me is something's pent up. There's some pent up demand. And I think that we have reached, really, for the past year or so, reached more or less a ceiling of how much people are willing to pay for a home.
I'm curious if if interest rates come down and I'm curious if there will be a flood of sales, people finally saying, all right, now's the time to sell. But that's going to be coupled with, now's the time to buy. I'm selling because I want to buy something. Now, and then is it a wash, or just as many buyers or sellers, and basically we're just going to see kind of a normal price increase, or for whatever reason is there going to be more sellers than there are buyers? Again, getting back to demographics, there's some people still trying to get into the housing market, looking for single family homes, and the folks that are going to be selling those homes most likely aren't selling them to go rent, although some could if they want that flexibility.
If you believe some of the articles, every week I will try just Google like housing or rental housing or apartment housing, and the last article that I saw, and this was when I was Googling for single family rentals for this apartment, it was like the headline from, I think it was Jacobin magazine, was corporate landlords are buying up all the homes.
So everyone says.
And like, we know that that's not necessarily, they're buying up like 1 or 2% of the homes, and they are not really affecting.
Where do people get the like 50, the 40, 50, 60, 70, 80%? I mean, the numbers that the layman and the majority of
Yeah.
people believe and throw out there is not 1%. It's not sub 10%.
Yeah,
It's
yeah.
they're buying all of it.
And I wonder if they are taking the fraction of rental homes, so like all the rental homes that are corporate landlord, or maybe they're defining corporate landlords to be a lot smaller than you would think.
Well, I think that's part of it also is that they see someone that's like buying it and turning it into a rental, like
Yeah.
an individual investor who might own one or two homes,
Mm-hmm.
or maybe that they're someone that's like flipping a house, because you hear
Yeah,
the same
yeah.
mentality of like, oh no, I don't want to buy
That's
from
a
a
good
flipper,
point. Yeah.
or I don't want to sell to someone who's going to flip it. I only want to sell to an individual,
Mm-hmm.
and so I think and there are a lot of professional or semi-professional investors that are out there, buying homes. And
Yeah.
so if you're in the housing market, you're bound to run into some of those folks because, they are trying to buy multiple houses and they're making attempts, and you
Yeah.
have to go after 100, houses or whatever the number
Yeah.
to get one or two. And so is that idea that is that the whole group of investors getting lumped into a category? But even if you put all the investors together,
Mm-hmm.
the single family home market is still driven by end users,
Yeah.
families,
And
individuals.
and I remember talking about this a couple of years ago. The investors are following price increases. They're not really causing price increases. And they're not even really there at the beginning. They're a little less savvy if you treat them as like a sentient person. The investor won't get in there first. The home buyer is going to be is going to be there first. Is going to enjoy the most price increases.
Typically,
when it
they're willing to
appreciates.
pay more. The ones that were paying, 10, 25% over asking was not Blackstone. It was
Yeah,
not
yeah.
the investor. That was the tech industry individual moving from the Bay Area to the Midwest, and they just sold their $2 million home, and they came to the Midwest and they see a $750,000 home, and they're like, well, I'm just going to put in bid in 800 just to
Yeah,
get the
they're
thing done.
following, not driving.
Yeah,
I would say.
Now, investors, their advantage is they can close quickly.
Mm-hmm.
Maybe they can close, with all cash, maybe more certainty of execution, a little bit more sophistication. But they're typically not going. They're limited by economics and
Yep.
returns rather than market economics rather than kind of home economics of what I can afford.
Agreed.
Fascinating.
No, there's a lot of other great stuff in this NAR report. They've got mortgage data here and employment data showing how employment has really kind of returned to the pre-pandemic trends after bouncing back very quickly. It's clear that we're kind of normalizing in terms when it comes to jobs. I still think that there's some. We've talked about the potential shakiness in the employment market with interest rates this high. However, cross your fingers. There's more chatter about Jerome Powell in September. Although that's as much as I'll mention it this week. Again, they also have different construction trends for single family and multifamily. Explain that apartment cooling. But just to chase an errant thought, returning to that John Burns article on birth rates. This idea that low population growth could turn our current undersupply of housing into an oversupply. I still kind of think about it, about how population growth fluctuated between 1 and 1.5% for the 30 years before the year 2000. And after July 2001, it steadily declined to about 5% today. Household formation, to speak to housing demand, is set to increase, I think, given the pent-up demand caused by low housing supply, but the base population needs to be there. The implications of lower population growth may be less meaningful, I think, than I'm making it here, but 15 to 20 years from now, I still think, it's not a huge thought, but it's a thought in the back of my head that 15 to 20 years from now, we could see a shift. Housing inventory has gone up in the short term, but the chart here shows, the chart just shows that it's followed a larger trend of decline since 2016. The housing crisis of 2008 was preceded by fairly high amounts of home building as well. So could this happen again? Is population growth a meaningful factor, or should I be thinking about the collective decision making about building homes and maintaining existing housing rather than population growth if I'm thinking about like the health of the housing market?
But also it's just worth noting that natural births are just the primary factor, but
Yeah.
the other factor to bring into account is immigration also.
Yeah,
We've seen
yeah.
a lot of immigration over the last couple of years. Taking politics out of it,
Mm-hmm.
to help us kind of maintain positive population growth in the United States. Not that there aren't other factors that more immigration causes, but that certainly could help buoy up the housing industry,
Yeah.
the rental industry, just because you're backfilling those lack of births with more immigrant population, which also offsets the smaller family trends. Like
Yep. Yep.
the article also mentions of how people are having smaller families. I mean, we're going to have need smaller homes, but again, maybe hopefully not stereotypically. I think there's some data to back this up. But immigrant families often have larger families. Typically, developing nations typically have larger families, for whatever reason.
Yep.
Not that immigrants are just going to be coming from developed nations by any means, but I think that there's some counteracting forces. It's just how as a country are we going to decide to deal with that? Are we going to be welcoming folks into the country, or being a little bit more closed off, saying we're good with what we got right now?
Yeah, yeah.
There's also some trends. I think it's a really small percentage, but there are some movements for having larger families and trying to have a kind of a snapback trend. And again, I don't know if it has a lot of legs on it. People saying, no, I want to have like 4, 5, 6, 8 kids. With Elon Musk, I think is like the big proponent of this idea of like, no, we need to what's gonna wipe out the human species outside of whatever the sun burning out or an asteroid is, we're just not gonna have any kids anymore. And we're just gonna lose our population and lose humanity because we're gonna stop reproducing. And it's our duty to to populate the earth and to crank out some more kids. But
those are some follow-on effects. I'll worry about that next millennium.
And there's like, how do you afford all these? There's so many societal questions, and but there's always, and this I think is true with human nature going back millennia of as society advances in some ways, there's often a correction and a reversion to or a harkening back to some more traditional values. And sometimes those trends, can solidify a little bit and saying, oh, no, we forgot about this and we do want to have this part of our culture. Sometimes it's more of a fad of do we remember this? Then, yeah, we do, but we're going to move on without it. So it's going to be interesting over the next couple of decades.
Yeah, I tend to think that maybe it's more of the building. When it comes to housing, paying attention to the construction and maintenance of homes may be a little bit more pertinent, more of like something to track than looking at population growth. That may be fluctuate.
Looking at the supply side more than the demand side.
Yeah. Although now look again to return to this idea of the birth rates of each decade. I was looking at this, and the birth rates in the early 2000s, that was the peak of birth rates. It had been increasing since the 70s, and then it got a little better in the 80s and the 90s, and then it got a little bit better. And now in the early 2000s, that was the peak. I think it was 41 million was the birth rate, and then the decade after was 39, which is still pretty great compared to the 70s, 80s, and 90s. My point is the millennials aren't in that they weren't born in the 2000s. They were born in the 80s and 90s, and so we're gonna see right now probably a couple decades, maybe 10, 15 years of apartment renters, the people in their 20s, the life stages of apartment life, and. Say what you will about single family rentals or the movements of the millennial generation, the movements of the Gen Z generation are going to become increasingly relevant, and they're going to be from looking at birth rates just as powerful.
Do you think millennials will have more kids? Do you think it's been put off for a variety of economic reasons? Great financial crisis put many millennials' careers off by 5+ years. And so, we're kind of entering in that, if that's, call it 5 years, where we now really, those peak child, bearing years, are they delayed by 5 years as well in every, life event for millennials, for that largest generation right now?
It could be delayed, but I mean, there is like a biological, like after you get to be a certain age, it's harder to have kids. And so
naturally,
the people that are 5 years, you may not, and that's like a tragedy.
You have one kid or two, you have one or two, but
it's hard to think that it didn't have an impact. That it, sure, it may bounce back even naturally. Like if you're delaying that 5 years, take biology out of it. all people, everyone that made that delay, they're not all going to say at the same time, all right, now it's time. They, some people are going to fall off and just say, no, it's time passed just because my life is different now. And I've,
It's very true. And I don't think maybe it was this was a this was in a report on last week's episode, man. And tell me if it is or if I'm read this somewhere else. But again, putting off those kind of life events and kind of getting married, but also there's less people that are getting married in general, and some people that are just kind of going it solo. Much higher percentage. And in fact, the cohort of that are getting married has been shrinking over time. And so obviously you can have a kid without getting married, but higher probability the children are going to go along with marriage. And so less people getting married, again, you may have whatever, your birth rate's going to continue to decline just because people having relationships different.
And how this affects the housing market kind of remains to be seen. I am interested in, is this interest in single family homes primarily driven by people with families with kids, or is there something about, getting older that you just want more privacy anyways? So
I don't know, I was just in Europe, Matt, and there's, there are single family homes, but there ain't no kind of suburbs like again, here or there, but it's all urban apartments, but the cities developed, hundreds of years ago also in a very different way. Without cars and, needing centralized services in cities. But also, there's a big argument that, America is going to continue to gravitate more towards a renter's nation rather than an owning nation. Now, again, we've talked about you don't necessarily have to own the single family home. And we have different technology. And our society is just built differently today than it was back in the 1500s or whatnot. But it'll be interesting to see how society continues to develop.
And this Moody's Analytics article, it concerns multifamily rents, but I think some of the most telling charts in there have to do with housing in general. Like we're saying, these bigger picture ideas of, are we building enough houses to support the population, and are we maintaining the existing housing? So, and this may play into this idea of a housing deficit. This idea that, you have a house and it's going to fall apart if you're not maintaining it, or there's a cost to maintain an apartment building, and it just becomes unable to support people living in there, whether it's because the houses don't work or the walls are falling down or whatever. There are, that does happen, and these buildings don't just exist forever. So that was an important consideration for me when I'm thinking about these ideas, not of population trends, but about the production and maintenance of homes, and how without that maintenance going on, then you're going to run into that deficit. That deficit is going to increase. But again, this Moody's Analytics' persuasive take on the state of the multifamily market, I think, a really good reminder to that another way to say resilient is still hanging on. Moody's has pared back its rent forecast to the low to mid 1% range in 2024. I look back at my Gray Report notes. I'm going to have to pare my mind back as well, because my own prediction was for 2% rent growth for the end of 2024 as well. I think, as a whole, maybe that'll happen in my hometown of Indianapolis. I don't think that the U.S. as a whole is going to have 2% rent growth. I'd probably agree with Moody's Analytics here. I'm willing to take my lumps, but again, this is the crest of multifamily construction, and you can see that in this first chart here in Figure 1, how much of a share of all housing completions were taken up by multifamily. Multifamily is usually just like a 10th or a 20th of all the housing completions in a given year. And in the years after really 2010, it looked like multifamily has just taken a larger and larger share. So that general trend of increased apartment construction started post-pandemic and has really accelerated in the years after the pandemic.
And I think this is a really helpful chart, because we talk a lot about how we're delivering more multifamily units right now than we have in like about 40 years. But we are still delivering less overall housing units than we have in prior decades
Yep.
before 2010. I think that's a big story, and we've gone into the demographics, how, again, shrinking birth rates, but we still have a positive population growth in the United States. And so, are we going to be keeping up? It's really fascinating.
But again,
yeah, go ahead.
Yeah, how they frame this, and I don't want to, I don't want to sugarcoat this a little bit. I think we tend to couch these comments about lower rent growth, higher expenses, and higher interest rates within a conversation about how we're going to see a lot more buying opportunities, how the unlucky or unwise apartment owners may be getting in over their head with ballooning payments and expenses without the rent growth to balance the scales. That's nice to think about bad things happening to the other person, but really when it rains upon the wise and unwise alike. The wise may have an umbrella, to continue the metaphor, but when it's pouring like this, everyone's going to get a little wet, even for the best operators. It's not like things are going to go better now than they were in 2021, except a few edge cases. I got a little fun there with my notes there last night, but
I like it. I like it. No,
Yeah.
I think that I've been hearing this more and more, and again, this is a little bit of a tangent, but I think this is the time to start looking at opportunistic investment opportunities, because there is so much kind of fear right now, and people saying, I'm hearing conversations, especially from the developers, of like getting out of the market because they are so beaten up and just fatigued.
Yeah.
Because it's not working. Projects that were started prior to interest rates rising are not profitable. Maybe you're losing quite a bit of money, if not being completely wiped out. And then also new projects aren't penciling. And so it's like, what are we doing here? And it's a question that, I asked the team about a year and a half ago or so, when we couldn't make any deals work because cap rates were still low, interest rates were high, rent growth was low, of, has the cheese moved? Is, what we're going after, by finding, high quality assets at good prices, so we can, move net operating income. That strategy didn't exist for about a year, or so, effectively. And development, it hasn't really recovered either. And you really have to speculate a little bit more, because if I'm doing an acquisition of a multifamily property, I can take like where we are today and say, all right, this is kind of maybe not worst case scenario, but like if it works right now, if we get any growth, okay, it's going to work in the future. I can still buy at positive cash flow and positive leverage in many cases now. You couldn't a year ago. But for developers, they got to estimate, what's my interest rate going to be in 2 years? Where rent's going to be? There's so much more that they have to speculate, and there's so much volatility and unknowns rather than, kind of general relative linear growth and relatively stable within a range interest rates. It's kind of like an unknown. And then, so, try to find a bank or, investors who are going to sign up for that. Few and far between. Whereas in the stabilized multifamily acquisition space, there's not a ton of equity available, but there is plenty of debt available from the agencies, and there is investor interest. So, seeing the opportunities, higher cap rates, positive cash flow, and this idea for some, I think savvy investors are willing to take a little bit more risk, if you want to call it that, of saying, hey, I think this is a great time to buy low, so that take advantage of growth in future years, even if it's not today.
Yeah. So that was, I agree. So that is the mood. And it is funny because being realistic about the challenges, yes, it helps to kind of guard ourselves against the bad things that happens, but it also helps to explain, I think, the market dynamics that we're facing now. It is worth thinking about, like, we've had these high interest rates and high costs for over a year with low rent growth. There's every indication that things are going to stay this way through the end of 2024. Why aren't we reading headlines from Globe Street or BizNow and other publications, industry publications for multifamily, that are describing the multifamily market with the words like alarming, or why isn't anything impending, like doom or ruin or anything? Why aren't we all marching towards ruin? I think it's because these charts in figure 1 and figure 2 here, where you see this housing deficit.
Exactly. Yep.
It's because people see the demand that's there, and there's no other way to see that, and you can't discount it. That's what I mean here. It's a real hard stopper. The size of this housing deficit. It shows not only do we have this deficit, but the for rent deficit is large, for sale one is large, and it has been building for quite some time.
And again, if we're looking at this as, cycles and periods, we had a period of oversupply, really kind of between, the late 90s all the way through the great financial crisis. But we've been in a deficit. And again, if the periods are somewhat similar, which they don't always have to be, but, we're really only kind of halfway or two-thirds through this period of deficit. Again, it doesn't always work, even like that. But certainly we need a lot more housing.
Yeah, so it's what it says. Say here, it's 600,000 pent up household formations. I think that reflects the high price to buy a home. It could reflect for some cases the high price of renting if people don't want
We've got
to
roommates.
Yeah, exactly.
In.
They want to get it independent. I think it also reflects the uncertain economic circumstances that we're in. Things may improve drastically when it comes to household formation when interest rates lower, just because it's going to create an environment where people can be a little bit more optimistic. But I do think things have been penting up. I don't know. The pressure has been building in terms of demand, whether it's for apartment buyers or home buyers or renters. The commerce wants to happen and it's not happening. That's what, when you were talking about, a home buyer that wants to buy, that wants to sell and buy another house, they can't, they're just choosing not to. But think of all these examples of you move jobs, now you have to rent because you can't buy a home anymore, or you just want to move closer to your kids in the same city. There are wants and desires and maybe even needs that aren't being met right now because commerce can't take place as easily as it was before. I think that's a net negative, and expanded into other industries. Things are just so slow and sluggish now, and I would argue if Powell knew what was good for him, he'd just lower those interest rates and create things that are a little bit better, a little easier for people. I think moods would change, sentiment would change, things would get nicer.
Well, I think that the yield curve is steepening right now. The 2-year Treasury has gone down, with the 10-year kind of been more or less flat, and so I think we're kind of moving into that era of somewhat recovery. Again, now we say that, wait for the the shoe to drop next week, but generally moving in a positive direction.
Yeah. So this intersection again between pent-up demand and persistent expense pressure for apartment owners, it does make me think about that idea of this lifespan of apartment buildings, the breaking point of a business model and of a building itself, and how the aggregate effects of this. It still costs money to keep these apartment lights on, and something's got to break, or someone's got to step up, or else the deficit's just going to keep increasing. So
true. Yeah. And you hear the insurance industry, don't mess this up for us.
Yeah,
I don't,
that's right.
Let's not get started on insurance. Let's not get started on insurance.
Yeah.
Well, Matt, these are great articles, a lot of data. I think some very timely points and a little bit of a different perspective than we always look at. Any other comments as we kind of wrap things up?
No, just keep your eye. We'll wait till next month.
Okay, yeah. If you like learning more about the housing industry, commercial real estate, multifamily, the economy, make sure you're signed up for the Gray Capital newsletter. It's called the Gray Report. Go to graycapitalllc.com/newsletter, delivered every Thursday morning at 8:30 with a little supplemental on Sunday. It's just jam-packed full of research reports, data. It's known as one of the best multifamily newsletters in the industry, from industry insiders, sponsors, LPs, data folks, you name it. So make sure you're signed up. And if you're not subscribed to the Gray Capital YouTube channel, well, that's easy to do. You press subscribe, hit the bell icon, and then give this video a like. And if you have any comments, whether it's we did a good job, you've got your own opinion, we did a bad job, drop it below, and on one of the next episodes we'll go through some comments and respond to you. All right, thank you for watching. Catch you on next episode.